Well, hello everyone, K Kim here from Traders Club, and I thought I would do a video, midweek update here, and just kind of let you guys know what I'm thinking as far as overall market is concerned. And I know that I've been bearish in the overall market, and I've been blogging, I've been putting video together about some of these insinuations that we had, and you know what? This market is completely ignoring that, and this market is continued to develop this uptrend here. Looking at S&P 500, we continue to cultivate higher lows, higher highs. So you know what, I'd have to say that benefit of Dow continues to go to the buyers, looking at this recent price action. So what I wanted to do though with this video is that some of the stuff we've been looking at in the past, some of the stuff we've been looking at the bonds, we've been looking at 10-year treasury yields, we've been looking at some financial sectors, and some of these insinuations that we had in the past, some of these warning signals. I want to talk about how are they affecting now, how are they implicating now with the current price action on the S&P 500, the NASDAQ, and the Russell, and the Dow Jones. As you can see, we have a flashing light going around all around here. Is because the market is not closed. We still have about 8 minutes to go in the market, and we'll just go ahead and do the video anyway. So what I want to do first is some of the stuff. One thing we first looked at was the S&P 500 versus Treasury yield, and we looked at some of these big pictures here and what was insinuating in the past and what that could mean today. Obviously this level has a very, very strong resistance level. It has been prominently respected, which means for a really, really long time, this is a pivotal level here. And recently you can see how well it has been respected as a resistance level. We did the same thing here. We also had a weekly bearish divergence right at that level. As far as, the Treasury yield and S&P 500 chart is concerned, we still have a warning signal there. You can see we have old support, possibly becoming new resistance there. We haven't closed above that. One other thing we can look at, if this market wants to see another, I don't know, like several months of bullish run, I really think that we need to get above this level right here, maybe go up, come down, and then make possibly just, get above this resistance level. Just because we get above that does not mean that, bulls are completely out of the woods yet, because last time we did something like that right here, and then that was the market top there. So we would have to kind of gauge with some of the indicators and oscillators and see, make sure there's no bigger weekly bearish divergence at that point. But right now, the warning signal is still there, because this is the neckline of this double top here. Old support, the neckline, possibly new resistance, we're not sure yet. Actually, let me zoom in on TNX here, treasury yield, and see what we're looking at here. Let's see here. So that one is right here. So let's go to TNX here. Obviously, we're looking at TNX. So as we zoom in here, you could look at it as this is kind of a neckline. You can see the old support, has been acted as a strong support, and then now becoming resistance. We also have 100, 200 SMA cross there. That's a death cross. Again, that's also another warning signal is illuminating here. And obviously, last few times when we had these level start to, cross the downside, this is back in 2010 and this is back in 2011, and those were the correction signals. Again, so warning signal is still there. You can see that 100, 200 SMA. So it's something that we cannot ignore, so we have to be very, very cautious here. But I think it could take time for these things play out. So, looking at S&P 500 and a Treasury yield 10 years, looking at this chart, we can see that we have 100 and 200 SMA death cross, which has been, it has a pretty big signal in the past for a correctional mode of the market. So definitely warning signal is still lingering around. Another one that we looked at prominently was the bonds. Something that I've been talking about the bonds for quite some time, and I'm still long on the bonds. And we were involved in the bonds somewhere about here, and then we took some position, took some profits right about here. And then we're just waiting for maybe another opportunity to add to our current position. But I'm holding for much longer term. One thing we have to understand about the bonds is, bonds can really Sometimes it can take much longer before we get a huge move up. Sometimes it could just be V-shape up like this. You can see that boom, 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 right? It just went straight up. This time we had to wait for like maybe I don't know, 6 months, a year. You know, here we went up and then we pulled back and then boom, right? So we went up, we pulled back, and then now we're deciding if it's gonna like hang around here a little bit before just thriving to the upside, or maybe, you know, come lower. And we still have this uptrend support holding there. And in itself, you know, the bonds holding up like this in itself is a warning signal for the market, because you can see what happened last few times when these uptrend support holds, as you know, the bonds start to make higher lows, higher highs, right? This was a warning signal in the past. The same thing kind of happened here a bit there, and then here uptrend support, 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 and then that was a warning signal, and that's what we're seeing here today. So again, as we continue to make new all-time highs, it seems like every week on the S&P 500 there is warning signal that is still flaring and still lingering around. But thing about that is, something that I always keep in mind is a price action is always a king. Everything else is subordinate to that. But you know, if you're a very, very short-term trader, like let's say you're trading for, I don't know, like a day trade or something like that, I guess this kind of stuff don't really matter because you're going to be in and out. But for somebody like me who wants to get into trade for more longer term, sometimes this is very, very important for me to, you know, gauge with and able to, you know, forecast the market, see what's coming. But obviously, you know, intermediate term, looking at this is S&P 500, intermediate term, we do have higher lows, higher highs. We're above 10 EMA here. So you know what, benefit Dow continue to go to the buyers. We do have this resistance level coming up here, so I don't know how that is going to play out. So you can see resistance level there, resistance, 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 and we're just right at that level. What I like, if this market wants to continue higher, what I like to see is maybe go up, come back down, retest, and then continue. The reason being of that being retest is that all resistance becoming new support, that is a very, very solid signal that it is becoming a pivotal level. Not just resistance, not just support, it's a pivot level. What I mean by pivot is now it is a solid level where it hits that level, you know, the stock changes direction, and then it makes a new trend. So let's say we went up, we got above that level, when it comes down, retest as a new support, and then it bounces back up. Now we can start a new trend to the upside, at least intermediate term. But if we don't do that, that could be a bull trap, and you know what happens when there's a bull trap. You know, when it comes down very, very fast. You know, when it breaks a certain strong, pivotal, prominent level, and then it falls back down, that's when the bear seems to go crazy. We've seen that happening on eBay. If I can find a good example for you guys, where is my... Oh, no. Go to eBay there. I'm typing it wrong. There you go. So, you know what we can see, I'm just trying to give you guys just example. Doesn't mean you can see this was a pretty prominent level. You can say this is a pivotal, this is a resistance level, right? Resistance. This was a, you know, could be a little bull trap there. Resistance. What it needed to do is break above that, come back down, and check this new support, and then bounce back up. It didn't do that. Once that was not, it was not able to bounce back up. Because if it did bounce back up, this level would have been strong, pivotal level, right? Pivotal level. But it didn't do that. So it was a huge bull trap there, and then see how fast it came down. And you know, so what I'm saying is that's kind of what I like to see. You know, if this level wasn't going to get sustained, is possibly get up and then come down and hit it and then continue higher. But if this thing falls from that on after getting up, it could become disastrous. So just keep that in mind there. But again, market just closed, so they're all calm here. Spider closed with 0.73%, Dow Jones 0.55%, and 0.56, 0.68% there. So again, Spider made new highs here. Let's go to line chart. you can see that we just made new all-time high, and in that process we put in another higher low there. 10 EMA continue to act as support, and you know what, as long as we're above 10 EMA, good things can continue to happen. So trend is up, and the price action says it's going to continue higher. The thing about it is we don't know when this thing is going to come down. This could continue higher. So at this point, you know, let's actually look at Dow Jones. At this point, benefit of Dow continues to go to the buyers. Dow Jones did not make new all-time high there, but you can see this level kind of held. This is what I'm talking about, the pivot level, right? This is one of the things I was talking about, is a pivot level, is that once certain level was acting as a resistance level and then now becoming a support. Let's see if we can do something like this. Okay, so we can do something like that. You know, you can see that we've got a little bit of bull trend there, and you see how fast it kind of came down. Sometimes that kind of stuff does happen, but you can see how it was resistance, 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 and then we became support, and then it bounced back up. And this becomes a solid pivotal level, and this means we could possibly continue in this uptrend there, and it just, you know, and then it maybe continue to make new highs, and then you know, something like that. So again, price action continues to convey that this market wants to go higher, at least minor and intermediate term. And again, don't forget some of the warning signals were still there, but price action is not confirming it. Same thing, kind of, you can look at this is a NASDAQ here. You can see this. You could say this is some kind of a pivotal level here. You know, resistance, a little pause there, and then that becoming a support, and then we bounce right back up there. So now we can possibly continue in this trend there. If it goes up, make new highs, which it looks like it might wants to, and then maybe we can we can see continuation to the upside, at least for minor term and intermediate term there. Let's look at Russell. You know, there's something that, you know, some people are talking about possible double top here. But now that that dream is gone, we close well above that. We have higher lows and higher highs. We just made new highs. Intermediate trend is up, and this is a bullish scenario. And you know, this was a potential right shoulder level. The next level could be somewhere in this vicinity there, and get to the all-time high. So right now, you know, one thing I also noticed was when these head and shoulders fail, when they don't play out, the market tends to become very, very bullish, because there's a huge amount of fear after putting in equal lows like this, and then when it continues to cultivate to the upside, continue to cultivate higher lows and higher highs, and just kind of reverses and kind of completely ignores this pattern, that's when it seems to be the bulls go really wild and really crazy, and they just seems to really bring this back up. And one of the good example I can see on the Russell here is that we had a potential head and shoulder formation that did not play out, continue higher. And you know, keep in mind that people always say the head and shoulder never plays out, and head and shoulder, you know, it either fails too many times. Well, it really does. It's not always the case. You can see this was head and shoulders that didn't fail. You know, we had a correction there, and then look at this head and shoulder here. We not only had a mini head and shoulders right here that played out, we had a big head and shoulders here that played out in a huge way. So these are warning signals that plays out. It's not that they don't always play out. Sometimes they don't play out, sometimes they do. But when they do play out, it's a beneficial. That's why some of the levels to look at, you know, it's good to see, you know, and just kind of gauge with the confirmation level. This was also head and shoulder before 2008. Market crash, left shoulder head, right shoulder. This was a neckline. We broke the neckline and continued lower. We had a bigger scale of the left shoulder, head, and right shoulder. So it's not that head and shoulder does not play out. Sometimes it plays out, sometimes it doesn't. So obviously for head and shoulder to play out, or for a confirmation, you know, it needs to break below the neckline. So, I mean, so right there. And sometimes, you know, what I like to do is I like to get in a little bit early so that I can get a good risk-reward ratio there. That's why I'm trying to short Russell. I initially went short right about here, and then I closed right about there. So I mean, you know, it wasn't bad. I mean, I had to hold through about a month or so without making any money, but hey, at least I went for it. And if it would have played out, that would have been a great entry. Don't you agree with that? You know, so sometimes sometimes we can't always wait for confirmation. But it's prudent thing to, you know, not only look at one index but look at all other ones. and just kind of see where they're going. And once the S&P 500 started making new highs and just ignoring what was happening in the Russell and the NASDAQ, and that was a kind of a trouble signal there for the bears. And then it never really confirmed. You can see this neckline never was breached, and you can see we have a hammer candle there, another hammer there, and then we made a higher low, higher high, and then once they started doing that, it was a cultivation of intermediate term bullish uptrend. So that was a bullish signal there. Let's look at one thing we've been looking at is this MACD signals on these financials. And one thing I want to talk to you guys about was, if I can load here, sometimes. Okay, let me go back to financial here. Let me just remove this. And so you can see some of the stuff that I've been looking on the financial is, you know, we're making higher highs, higher lows here, which is an uptrend here, and very, very tight range as well. Could be some kind of rising wedge, which is a bearish signal, but we don't know that yet. But we can see the MACD continue to make lower highs, and so for this to be nullified, MACD really needs to get up here and at least gets above this level. And same thing happening on the U.S. financial services. You can see that we're, you know, MACD is tumbling down here. We're kind of at the highs, and then MACD kind of did that. What else was there? What was another one? Regional bank. So it's interesting how the U.S. financial services and, you know, regional bank, we did put in equal lows there, but we don't know if this potential items are just going to play out or not. Same thing with the regional bank there. See, regional bank actually looks much more bearish. You can see how that right there, while, you know, we're still kind of at this right shoulder level. So again, these are insinuations, but so the warning signal is still there. The TNX is still there. The bonds is still there. Some of these, you know, weekly chart on the banks and financial services and regional bank, there's a little bit of insinuation there. But the price action of these indices, the Russell, the NASDAQ, the Dow Jones, the S&P 100, they want to go higher. And we can continue higher next, I don't know, next week or so, maybe minor term, intermediate term, and this could continue grind higher. And you know what? And so benefit Dow continues to go to the buyers. And, you know, at this point, shorting this market is out of the question. I would have to at least see this thing coming back down to this level, and I don't know how long that's gonna take. So this point, I guess you know, I would suggest that staying long is the best thing to do if you're, you know, but if you're a really long term basis, then maybe staying in cash is the best way to go, again, because there's still a warning signal there. And you know, it just, you see how much we've gone without some sizable pullback, and sooner or later we're gonna get it, but we don't know when, right? We don't know when that's gonna happen. We don't know how long it can grind higher. I mean, this market can stay rational longer than we expect, and so, you know, as far as just price action, just pure price action is concerned, benefit Dow continues to go to the buyers. And as long as we have higher lows and higher highs on S&P 500 and the NASDAQ, then we continue to give benefit Dow to the buyers. And you know, it could take months. And also, you know, for forming topping pattern here, it could take months. I mean, you can see right here, it took about 6 months to form that. It took about 3 to 4 months to form that topping pattern. And this probably was about 6 months to form. So which means even we're at the near top. You know, this market isn't just going to continue lower here. And I mean, if you were doing something like this here, you know, if this thing would have came down, and then we would have really had a correction there, but it didn't continue higher. So now for it to form another topping pattern is probably could take some more months here. So I think at this point it's prudent thing to kind of, you know, continue to give benefit out to the buyers. And then until we see some kind of a topping pattern, because this market isn't going to just go up and then just one day do this. That's not going to happen. It's probably going to have to form something. Either it's going to be head and shoulders, triple top, or something. But, you know, NASDAQ made an all-time high. Dow Jones, Dow Jones, not today, but I mean Dow Jones obviously cleared some of this important level there. So you know what, it does look bullish. But you know, keep in mind that there's still a warning signals of this market that could happen, and I don't know when that's going to happen. But once that happens, we'll see it in the price action. So those insinuations that we have, those signals, some of those charts that I've shown you with the banks and the weekly chart with MACD, and also the TNX, the 10-year Treasury yields, and 20 years of Treasury bonds, and all those insinuations that we have. Well, if we don't have price action confirming that, really we can't put too much weight on that. And you know, when the Russell came down, when the NASDAQ came down, you know, that was a good price action, a weak signal, and then plus some of these other things I was looking at, you know, that was a good signal then. But now that the NASDAQ has been, you know, gone up, and the Dow Jones and everything else seems to just continue to go higher, now those insinuations that we have is still there, but it's tough to pull out a weight on those right now. We need to see price action confirming that. So until then, you know, we'll continue to look at this market bullish, and we'll go from there. And if I see anything else, we will I will make sure to blog about it and maybe put up a video. Next Wednesday I'll do a live midweek update, so feel free to join me there, and you know, we can look at it and see if we first see any kind of signal then. But hope you guys are having you know, getting good luck this week, and we'll talk soon.